Right, good morning. This is Iain Butler here from the Buttercup R&D tax team. We're sort of waiting for a few more people to turn up, so I'll sort of just give a little bit of a preamble, and then hopefully by the time I've spoken, we should have everybody here, because we've got quite a few attendees who want to find out a bit more about what we're up to. I guess the first things in terms of the way this is going to work, unfortunately, we were hoping to run this in the office, but sort of circumstances have overtaken us, and we thought it'd be difficult for people to travel in, so we've gone to a virtual arrangement today. The only disadvantage of that is we can't sort of have chat as we're going through the slides, so you will have a Q&A button that you can click onto. It's anonymous, so you can just type whatever you would like to know. If you've got any questions, just add them in there, and we will sort of get to the end of the presentation, then we'll pick up the questions and talk through whatever thoughts you have or whatever queries you have about sort of taking the claims in-house. And so we've got a few more people who have just joined, so I think just give them maybe one more minute for a few more people to turn up, and then we can go into talking about taking R&D claims in-house. So I can see quite a few have just joined now, so thank you for attending and joining us at Buttercup. I'm Iain Butler. I head up the R&D tax services team, and I've been preparing claims now for 17 years, something like that. And I guess what we're going on to today is sort of the way things are slightly evolving and changing in the world of R&D tax credits. And I've got a colleague, Luke Barnbrook, who will join in partway through and take over some of the slides. So you'll get to meet another person in our team. But what we really wanted to go through today is this idea of taking claims in-house. We have quite a few clients actually who have now made that change, and it's something that I think is going to become more important. So I was going to start off really with what are the arguments for and against taking the process in-house. It might sound relatively straightforward to do it, but there are the complications that come with it. But if you want to do that, then what is the requirements for doing that? What do you need to do to make it work and make it successful? Because there's more than just sort of getting the claim together. There's quite a lot of project management that comes with the process. And then just sort of finishing off, looking at, well, how do you make the change? How do you plan for that move so that it's smooth and it's not end up being very disjointed and the claim gets a bit muddled and delayed in that process? So that's what we're going to go through today, but let's start off really with, why do companies think about taking a claim in-house? I think the first thing that maybe people are not so aware of is actually things are going to start changing going forward. HMRC is asking for somebody within the company now to take responsibility for the claim, so effectively to sign off to say the claim is correct. And that person will be responsible for the claim. They will be the person that HMRC will come to, will ask questions, and it's very much like the sort of the senior accounting officer arrangement that you're seeing for larger companies, but it's been brought in here because I think Revenue feel that maybe some companies don't quite understand what they're putting in place. So that's going to come in from the 1st of April 2023. Really, the big requirement to be able to do that is you've got to actually understand what's being claimed. And although that might sound quite a straightforward point, we do see, and some of our clients and people we talk to, this can be quite difficult to get that information directly from an advisor. And really, that's not going to be acceptable. But going forward, that the company really needs to know what's going into that claim, why it's being claimed, and do they feel comfortable with the positions that are being taken in terms of the claims going into revenue. So there's I suppose a regulatory change that I think will drive more companies to consider this going forward from April next year. But also, part of the reason we see companies doing this is they want to try and build the R&D claim into their internal systems. So looking at, can they have sort of a more real-time monitoring of the claim value? So either going into an audit process, they've got an idea of what that claim is going to be and a good feel for where it's going, or otherwise just having the ability to check the projects as they come up, and new projects come in and possibly get forgotten about until you get to the point you can do the R&D claim. They could get missed. So I think there definitely is a real-time monitoring aspect that people are looking at and have tried to build in. But I think there's also the thought that if you can build it into the internal systems, you can speed up the claim preparation process. I don't think anybody's quite got it to just a one click and out comes the claim at the end of that process. But that's what a number of companies are trying to aim to get, at least the proprietary spreadsheets built up so that they then can go and either work with the advisor or work internally to pull that together, which of course then starts to talk about automation opportunities to try and pull in regular costs that you're seeing within there. And eventually that's sort of where I can imagine companies will start to look as extra add-ons come into packages like Xero. You can think about maybe some of the automation. But I guess one of the big drivers is reducing the cost and retaining more benefit. And unfortunately, I think this is actually going to be quite a big driver going forward, that for a number of companies are going to see their claims drop next year as overseas costs become restricted and you can't claim for them. So to try and retain as much benefit as possible, there probably are going to be questions about how much cost goes into preparing the claim. And there are further changes on the cards. It's sort of a bit looking a crystal ball at the moment, but it feels like potentially for smaller companies, they may see some other limitations coming in that will reduce the benefit. So the cost benefit around how much do you pay for the R&D work is going to come into discussion at that point. But equally, I think if you look at the other side, why should you prepare it or get someone else to prepare it for you? I think it isn't a straightforward, it's cheaper, therefore go down that route, because there are other questions that come into this. One of them really is around your resourcing, and do you have the resources within the company to take on this process? Using an advisor can take the workload off the finance and technical teams. And obviously an advisor is familiar with the way the claim is pulled together, the documentation requirements from HMRC. So we can get to what's needed quite quickly, and it just limits the amount of time within your team. So unless you have the resources that can be diverted onto an R&D claim, having an advisor is definitely the right thing to do. We're also seeing issues within HMRC, and this is the type of thing that we get involved in a lot, and that's either around processing delays or their random inquiry process. So unfortunately, within the last week or so, Revenue have changed their processing time to 40 days. It has always been 28, but at the moment they're struggling to keep with that. I'll come back to that later on as to why that is. So the advisor can be there to chase your payments and make sure that things get processed on time. But also we see the queries coming from Revenue, whether that's people coming to us with their queries and asking us to help with them, or otherwise seeing some questions coming in on clients. Although we don't see very many of those, we sort of understand what Revenue are looking for when we do get questions. So we can tailor what we're producing to avoid those questions and answer the sort of issues that Revenue are looking for and are concerned with. So it can ensure that you speed up that process and get the payments in as quickly as possible. But it might not be that actually going to an internal model is the right thing, because your internal costs are still there. Your staff still cost you money. Their time is worth money to your business. And they could quite easily be doing something else that is more important, potentially more benefit to the company. So you need to try and look at the trade-off in terms of cost benefit, in terms of where to do that. What we tend to find is actually we get to more of a partnering arrangement that's sort of a halfway, maybe a halfway house between them, where we take on some parts of the work, then the internal team take on other parts of it that they feel comfortable with, and it works for them. And that's sort of breaking the model of just the pure contingent model where the advisor just takes everything over. It's saying, no, actually, we will partner and we'll give you the value add that you need. So I think there are questions about it, and companies will think one way or the other in terms of whether they want to take it in-house. But obviously, some companies are going to think now is the right time to do that. So what is required to take the claim in-house? I mean, I guess most people who are on the call are going to be quite familiar with the process, but underneath the bonnet, in terms of, well, what is going on and what needs to happen to put that claim together, there are actually quite a few steps. And I'll just go through the high level, and in a minute I'll get Luke to jump in and go through the two different work streams. But really, the key things that you need to be doing to be able to prepare a claim is, firstly, you need to understand the legislation and the requirements to make a claim. HMRC provides an overview, and that's helpful, and we will quite often point companies to various bits of text within there because it helps to know what revenues view is. But it's not complete, and it doesn't actually take you through the steps you need to do. It just tells you what the requirements are. So one thing we would recommend if anybody's doing this and going in-house is really you do need training and you need support to take you through that process. So make sure that you do understand this legislation correctly. And talking to revenue, and it's sort of mentioned a bit on the website, they do see an awful lot of mistakes in in-house prepared claims. And there are some very common pitfalls they see. So it is making sure that you really do understand the scheme and you understand what it is revenue are looking for. And they use some terminology that maybe is confusing, could be used in a different way in a business context. So it's just making sure you do understand what's needed. But I think one of the things that's quite different with this piece of work for a finance team is that you have to work very closely with your technical teams, get it to work and to get everything together. That the work does split between the finance team pulling the numbers together and the technical team pulling together the eligibilities and the documents, but they've got to align. Otherwise, the claim is going to appear disjointed to revenue and they're going to struggle to understand it. Otherwise, mistakes can creep in where one side assumes that something's eligible, the other side doesn't know what they're supposed to be putting into the claim, and you end up with it just not being right. So, I mean, if we're doing this, we do have the template, standard procedures, and it really, that is key to setting this process up. It is to have that thought about how are we going to do this, and do we have something written down? Do we have something set out so that we can make sure that this is correct? But I think the main thing is to treat this as a project in itself. Is not to say, oh, it's just a claim, we'll crack on with that whenever the time is right. It does need to be managed and to make sure that it's tracked and that everything is being done at the right time and everybody knows where the claim is with the other teams. Otherwise, it's going to end up with one team chasing the other, and sort of disputes coming between various people. So it needs to be planned, and then you can make that transition as smooth as possible. So I think that, in a nutshell, is what you're looking for, is understanding the legislation, making sure that the teams are working together and having a project management overview on top of this. But the key parts to the claim, and this is what I'll get Luke to present on now, are the financial side of it and pulling the numbers together, followed by going into the technical work. So I will jump over to Luke.
Yep, thanks, Iain. Yeah, so as Iain said, I'm going to run through some of the specifics of what taking the claim process in-house will look like. So I'm going to look at the two work streams, the financial work stream, and then I'm going to look at the technical work stream on the next slide. And I'll try and set out some of the common trip-up areas that we see. So on the financial work stream, the first point we have is claimable costs will have to overlay onto the eligible projects. I mean, at the moment, HMRC isn't prescriptive on how claimants are meant to do this, but they do have an expectation that it's done, and they will also expect you to use a logical and reasonable approach. And particularly if they're not satisfied with your report that you've submitted and trigger an additional compliance check, at that point, they will possibly ask you to provide your methodologies and what you've actually done to overlay those costs onto the eligible project, and want to see your supporting records. So we've got a few considerations here, but I guess it's just worth saying that, as something Iain touched on earlier, that the easiest way to make sure you're doing this is to have a real-time R&D record keeping process in place. So you can have something like a tagging system or separate ledger codes, and that will save time when you come to prepare your claim, and also mean you have that contemporary linkage of cost to project. But whether using real-time record keeping or prepare the calculation at the year end, there are some important considerations. So firstly, an R&D costing schedule often won't match back with your finance system, and therefore you need to make reasonable estimates for bringing your costs into your claim. And at this point, it's helpful to bring in the technical team, as they're the ones who are probably going to have a better understanding of how each line item links back to the qualifying work, and you can have a better explanation of why you're claiming certain costs. It's then important to actually record the rationale behind the assumptions. So as I mentioned earlier, it's possible that HMRC might actually look into your claim after submission, and sometimes after the benefits have been paid out. And having that information readily available will just mean you can shut down that compliance check quite quickly. And I mean, the other reason it's important to record it is that personnel within a business changes, and the person who was responsible for preparing your claim may have left the business, and if they haven't recorded how that claim is prepared, somebody new won't be able to provide that for HMRC in case they do come asking questions after the claim's been submitted. And if you're claiming for a number of projects, extrapolations can be used, but they need to be applied with care. So sometimes, due to the volume of projects undertaken, we will apply a sampling approach. So that is in line with the requirements set out by HMRC, but your approach needs to consider an appropriate sample. You need to be covering sufficient costs. And then, even though you're just looking at a sample in detail, you'll need to look at the rest of your list to make sure that there aren't any exception projects that should be coming in at a higher eligibility or a lower eligibility. So extrapolation's fine, but you need to have a statistically sound approach if you're doing it. So identifying qualifying costs is one part, but the finance team will also need to interrogate the costs being claimed to remove ineligible activity. So one area that is particularly tricky is furlough costs, with things like NIC being overlooked. So where this gets complicated is if staff have been partially furloughed and any costs associated with that furlough period need to be removed from the claim. So that includes top-up payments and the proportion of NIC and pension costs which are associated with that furlough period. And those costs need to be separated out with a clear methodology that is visible to HMRC. So that's one area we see claimants stripping up, is they'll potentially taken out the furlough time, but then they'll left in the associated NIC and pension costs. You also need to be looking at costs in a fairly granular way. So using a trial balance code and applying an average percentage can cause major issues. And that's actually probably one of the bigger issues you see with claims when we're doing things like due diligence, because we often see a claim where companies just taken a ledger code, they've applied a percentage, and it might mean a company is underclaiming, but more seriously, it leads to companies claiming ineligible costs, which leaves a claimant company vulnerable, because like I said, if it's picked up in a due diligence exercise, then the potential investor is going to see that there's a risk because they've got an incorrect claim, and that can lead to all manner of problems. And I mean, by looking at costs in a granular way, you can actually potentially have a stronger claim. So, for example, splitting out consumer costs of subcontracted work within a single contract can increase the claim value significantly. But sold prototypes have to be excluded. So the prototype rules are you can claim them as long as the ownership hasn't been transferred within the ordinary course of business. So to conclude on the financial work stream, setting up the claim methodology at the point the process is transferred in-house is critical. You need to get help or formal training because you need to do this right, and the risk of getting this wrong are quite significant. And as we've emphasised, get into the habit of recording everything to allow others to follow the process, including HMRC. So if we just jump across to the next slide. Thank you. So I'm now, so that was the financial work stream. As you can see, there's a number of considerations that need to be made there. But now I'm going to touch on the technical work stream. So the technical team will have to do quite a lot for the technical work stream. So they'll have to prepare a number of items to complete the claim. And as you can see, this can include identifying the eligible projects, determining the eligibility of staff and expenditure items. So you've got contractors or subcontractor costs, and then actually preparing the technical descriptions to support the claim. And these parts of the process are going to be very, very time consuming. So the type of eligibility assessment needed for an R&D tax credit claim will depend on the particular details of your company and the type and I guess the volume of R&D activity being carried out. So the eligibility assessments are something which HMRC often flag in tribunals. So they've shown frustration where companies have focused on work that doesn't fit within the R&D definitions. So for example, companies looking at, I don't know, social science work or commercial activities. So before taking this part of the process in-house, it will definitely be worth agreeing how you're doing eligibility assessments with an advisor, and then going forward having that sense check just to make sure that things aren't slipping in or you're not missing things out, because the R&D definitions they're not always that easy to interpret. So it's useful to have an advisor to make sure that that's all been done right. And one of the bigger tasks again for the technical team is going to be the technical narratives. And that is probably the most important part of the documentation that's presented to HMRC, because that's where you explain the technical advances and the uncertainties and are essentially justifying why your business has a eligible claim. But again, it's one of the areas where applicants are often tripped up, and a poor technical description can result in a claim being rejected or a long and drawn out inquiry process. And it could be things like particular styles of expression or writing that they're known to trigger concern with HMRC. So we've actually seen in some tribunals HMRC picking up on things like bespoke, which they apply a specific definition which some companies may not use, but because HMRC apply that definition, they can, something like using that word can trigger concern. We often see claimants focusing on things like commercial aims or discussing functions and features instead of actually digging into the underlying technology. So again, with the technical description, even if you've decided to take that in-house and write it yourself, it's worth having an advisor looking over it, because there can be major things and there can also be lots of small things which can just add risk into that technical description. So it's important to make sure that's robust and it's capturing your work accurately and doing it in a way where it ties in with the R&D guidelines. So you need to make sure this is all done properly. So ensure you translate the tax requirements into points that can be understood by the technical team. So the R&D guidelines are very generic and they need interpretation to be applied correctly. So it's important that you make sure your technical team understand the boundaries of an R&D project for tax purposes, because R&D for tax purposes may have a different definition than R&D applied elsewhere. And it's also important that you make sure your technical team understand the scope of activity that can qualify, because you've got HMRC set out the boundaries of an R&D project, and within that there are qualifying indirect activities, qualifying direct activities, and it's making sure that your technical team understand all of this so they can assist you with the eligibility assessments and get that right. Because if you don't do it, the result could be underclaiming, or again worse, an inflated claim, which can cause lots and lots of issues down the line. So it's also worth noting that the finance records and the technical information may not align. Therefore, a common methodology needs to be agreed. So there isn't really a one-size-fits-all approach here, as every project and every company is different. So it might be worth sitting down with your advisor again and having that conversation and make sure that there's a sensible approach in place, which is going to be robust and can stand up to scrutiny. So to summarise the technical work stream, it's important to not underestimate the time that it takes to prepare the supporting documentation. This is the main area that HMRC query, and shutting down a HMRC inquiry can take up to 6 to 12 months. So it's not a quick process, and it is a lot of back and forth with letters and emails, and HMRC can sometimes turn it into a bit of a fishing exercise. So the best thing you can do is just have a decent claim preparation, a decent preparation process in place to make sure that doesn't actually happen. And the technical team need to be clear on documentation required to avoid rounds of comments and updates. So that was the financial and technical work streams. So I'm now just going to pass back to Iain.
Right, thanks, Luke. So I think Luke has sort of gone through in a lot of detail there of the two different areas, and it's something that I think a lot of companies start to build up that knowledge and understanding over time, and it is one of those things that it needs a bit of time to get used to and understand exactly what's needed. But over time, I think companies do get to the point where potentially they can think about bringing the claim in-house. And the main thing about planning it is don't just assume you're going to follow exactly what happened last year, that there may be quite a lot that was going on in the background that you're not aware of and not sort of so familiar with. So I think the first thing, and it's probably what we've sort of mentioned a little bit before already, is to actually start the process, to sit down, agree with the process up front. And at this point, you really need to be planning it. And what do I need to do? What do I need to do in terms of coming in with processes and getting everybody to agree that before you dive into the work itself? I mean, one of the things that I guess Luke has also touched on is the legislation is open to interpretation. It is generic, and it's trying to make sure that the whole team agree on what the approach is. You haven't got the technical team going off down one route, the finance team going in a slightly different direction, and you end up with either confusion and can't understand quite where you've got to, or otherwise errors starts creeping at this point. And this is sort of where we would work quite closely with the company doing that first year claim, and I think that's where the advisor can add the value, and they can speed up that first year in-house claim and getting to the point where you're doing more of that work in-house, and you've got complete control over the claim and know what's going on. I think the bit that a lot of companies forget is really that there needs to be somebody who is taking on quality assurance, quality control for the claim. The errors can creep into spreadsheets. You need to make sure that the numbers track back to the general ledger or the trial balance, and they definitely should match the accounts. And this is where things can either something's getting put into the wrong accounting period, people have forgotten exactly what happened when. It's just making sure it does all track back and that there aren't any mistakes. And somebody really needs to give that a review. The documentation being supplied needs to be straightforward, and it needs to be understandable so that the inspector, who isn't going to be a technical specialist, can understand what's going on. So although templates can help, don't over rely on them, because it might be that actually what you're doing is not exactly what the template is trying to set out. So make sure that the documentation is consistent, it follows through, and somebody reading this with a fresh pair of eyes in this sort of QA, QC type role can give you that check and make sure that it works. And somebody needs to make sure that what you're saying you're doing in the claim process and what you describe to revenue is the same thing. Again, this is where templates can cause issues, and just boilerplating a document and sending it to revenue is not necessarily the right thing, because when revenue ask a question and then they can see actually what is being done is deviating from what they're being told, that opens up a whole raft of questions, and it can go into rounds and rounds of queries as to, well, why did you say that? Why did you then do something completely different? So I think that is quite a key role, and it's sort of the role we take on quite often within the claims, where we're helping a company through that process, is to take that more independent view on it and looking for that consistency, looking, can we see any errors? Can we see anything that doesn't make any sense? Or does it all sit there consistent? Does the extrapolation methodology actually match what's being undertaken? It's that type of thing that we look for. And it is quite a detailed process, and it's would need somebody who does understand the claim process to undertake that. So I think what we've gone through on a lot of these slides is basically, if you are thinking of taking this in-house, is really don't go alone. Don't try and just replicate what you've got. I think it is worth investing the time and having some support with somebody who will partner with you and will make sure that the time and effort you're spending in trying to bring this in-house doesn't go to waste because something's wrong and revenue going to ask questions. It is, a lot of advisors will turn around and go, oh, it's just too difficult, don't do it. But I would say be realistic. You've got to be realistic about what resources have I got? Have we got the time to do this? And am I really better off taking on parts of the work rather than just going and doing absolutely everything? So, yeah, some advisors are going to push back very heavily on this and say that they're the only ones who know how to do this, but it is something to be realistic about. But I think the key thing is having somebody who can help with a third-party review and make sure the claim is right and it doesn't trigger HMRC queries. And I think that's where we feel we can add the most value when we're doing this type of work. And it allows the company to understand the claim, understand exactly what they're putting in, and have control over that process, but also have the comfort that what's going is right and revenue are going to be comfortable with it. And in a way, what we act as, if we're doing this type of role, is to basically put the inspector's hat on and say, well, if I'm an inspector, what would I ask questions about? And it can be sometimes quite detailed information that we're looking for, and we've been quite challenging. And I mean, yesterday we were going through with one client who are working very much in the AI machine learning space and picking out words like data schema and saying, well, actually revenue might consider that in a different way than you're using that wording. And we're providing that sort of critical challenge to it and just trying to make sure that we're taking out those trigger points. But I think if you are doing this, what I would say is don't assume that the advisor prepared claim that you have is the best that can be achieved. We prepared lots of due diligences and we see lots of claims, and I think there are issues that come into the way they're done. Sometimes they can be rushed and the time and effort hasn't been spent to make sure that the claim is right, the claim documentation is correct. And I think this is coming back. I mentioned about the 40-day delay for processing claims. What we understand, and revenue haven't actually confirmed this, but talking to various people that we know, we believe that revenue are struggling to process times, to keep up with the processing times at the moment, because they are challenging claims by a group a number of advisors where they believe there's a lot of errors. So it is something around those claims they are quite concerned with and are starting to challenge what's going on there. So if you have got a claim and it's coming from an advisor, it is worth, before going into this process, just making sure that someone else has a look at it and just make sure that is the best that you can be doing. It's robust, it's got everything that's needed for revenue, because there are claims that revenue are quite uncomfortable with at the moment. So get the claim checked, make sure you understand what that claim's doing and that you're not transferring misconceptions and errors into your claim that you're preparing. I mean, some of the things we see is quite often hosting costs just being claimed because it's assumed by the advisor that that was okay, but revenue and don't accept hosting costs. We see that sort of issue coming through, and sometimes it can be more fundamental about the eligibility assessments that are being transferred into the claim. So in terms of getting help, I think this is the bit that's worth looking at, and just making sure, don't just transfer the claim straight in, have a think, get it checked, make sure that it is the right thing you're doing and it's the right thing for you. The other part is the legislation and HMRC processes are changing, and they're changing a lot at the moment. Having worked in R&D credits for so long, it seems like we've had quite an easy ride up until the last couple of years, that there's been changes, but they're probably about every 5 years. Now we're getting changes pretty much every budget. And having somebody who can work alongside you just to keep you up to date and make sure, have I got the PAYE cap? Have I got everything covered that's going to come in on the 1st of April 2023? And we may well have some more changes coming through in the autumn budget. So having somebody who can explain what they are so that you can start thinking about preparing it. And part of what we're going to do on our next event is to start talking about preparing for the change in overseas contractors and not being able to claim for those costs, and what can you do, how can you can deal with that. And that's sort of part of our events is around giving that sort of support and help, and then you can understand what might be needed to try and deal with these. But definitely have someone who will partner with you and talk about what's going on. But I think the key thing is, I mean, we've gone through all the process and given you an idea of what it would look like. And yes, it might sound quite scary, but I think a lot of companies do consider it and look at, is this the right thing to do? And we have a good number of companies that have gone through this process. We've helped them through that process, got them into the right place with it. And they're now into more of us providing support and challenge and keeping them up to date with it. And it's doable, but it has to be realistic. And it's something I think will probably become more and more important going forward as the changes that revenue are looking to do and the challenges that are coming through, that companies are going to need to know that process a lot better. So that was everything we're going to present. There's our contact details at the end. I was going to jump back to Luke to see whether we had any questions on the Q&A.
Yes, so we've got a couple of questions coming through. So the first one we have here is, how long after submitting a claim can HMRC open an inquiry?
So HMRC can open an inquiry within the amendment window that you open up. When you put amended claim in, they can look for a year, and then there's it sort of corrects it to the end of the quarter when you're looking at that. So nominally it's about a year that they can look back from that time that you submit the amended claim. So they do have that set window, but if you've gone in and put a claim in and they can see an error, and they can see it's an error that's been sort of hidden from them and hasn't been explained, they do have a discovery window, assessment window that can go about 6 years. It would have to be something quite serious at that point. But I do believe this is probably what they're starting to look at with the claims at the moment and the delays to the processing times. So there is that, but that's only part of it. If you go into due diligence and your advisor who's looking at the due diligence suddenly points out actually you've claimed for hosting costs and you shouldn't have done, you're going to have to think about, well, actually I've got an incorrect claim here. Should I be correcting it? Should I actually be sending something back into revenue for the years? They might be closed, but actually going back and being honest and saying, sorry, we made a mistake and we've got to pay something back. So it is that sort of thing. It's not just revenue, it's the DD process and how you view your tax. And if you want that to be right and correct and there's nothing wrong in there, and you have got errors, you may well end up paying things back to revenue that are even outside of that amendment window. And unfortunately, we're working with somebody at the moment who has a sizable error that's crept in where an advisor has not applied the 65% restriction correctly, and they're feeling, because of the nature of their business, they want to try and correct it, but it is going to be quite a sizable payment back to HMRC. So you don't want to get to that position, but the main thing is make sure that your claims are correct and there isn't really anything that can be picked up in this way.
Yep, and thanks, Ian. And we've got another question coming through on software. So what are HMRC's position on claiming hosting costs? I've heard mixed advice from advisors.
So hosting costs you can't claim for. That is revenue's position. They view it as a rental payment, and it has been that since the scheme started. Part of the problem we have is when the scheme started, software costs were basically something that appeared on a CD and was put into a computer and away you went, and they haven't really kept up with software as a service, platform as a service, and all those sort of things. So there's actually quite a challenge at the moment as to, well, what is a hosting cost? What is actually a license, and what can I claim? And revenue, the government realised this and want revenue to change the rules. Revenue are possibly a little bit reluctant about making those changes, but hopefully we will see hosting costs dedicated to R&D being claimable from the 1st of April 2023. So at the moment you can't claim for it. Hopefully going forward you will be able to.
So we just had another question coming through, which I assume is in relation to the question prior to the software question. And that's, wouldn't that provoke HMRC to look further into your claim?
In terms of being honest about it and putting something through. I would be worried if that was the view that you had, that there were other things, and this is why we try and go back and dig properly into the claim and try and make sure that there aren't any other things there. Revenue, well, we've done this, and actually Revenue took the view that you're being honest, we'll accept that there are changes to be made, and didn't actually ask any further questions, because they sort of realised that maybe you got good advice and now you realise what the errors were. They could do, and if there were major errors and it was quite obvious that the claim had been poorly prepared, that hadn't been understood properly, they may well start asking some further questions at that point. But you need, if you do get to that point, you need to understand what those would be, and you need somebody to be honest with you as to where those other questions may come from. But if you think the rest of it's robust, Revenue may ask the questions, but they can't take the money away for what is a right and correct claim. I think it's really around being honest and being truthful with Revenue at that point, and being truthful with yourself as to, well, what is a robust claim, what should have gone into it, and what maybe was something that overstepped the mark and should be taken out. But hopefully, if you've done the claims in-house properly, you know what's there. There shouldn't be those issues lurking in the background.
And is it worth mentioning again the risk of having an incorrect claim that hasn't been amended?
Well, I mean, in terms of having an incorrect claim and you haven't amended it, the risk you do have, if all of this is going on at the moment with Revenue looking at claims and challenging companies about their claims, if they spot your claim and ask you to make a change, it then becomes a prompted inquiry, and you could go into penalties and various other things at that point. So there is a good reason to try and be honest and tell them what's there, because it becomes unprompted, and the penalty regime changes at that point for that. So it is it's the right thing to do, but it's also going to prevent there being issues that if revenue do spot it, they're going to basically come knocking on your door and want to know exactly what's going on, and really will challenge you very heavily at that point.
Yeah, thanks, Iain. So I think that was all the questions that we've had today. I don't know if there was anything else that is worth touching on.
No, I don't think. I think they were quite interesting questions that we've gone through there. So I'm hoping that that's been helpful for everybody who attended. It's probably a slightly different topic than we go through before, and I hope it gives you some useful pointers in terms of how you might look at taking it in-house, reasons why you might look at doing that given what's changing going forward, and sort of where revenue are as well in terms of their challenges at the moment to dealing with what they perceive as a lot of fraud and checking claims. So I hope that's been useful, and if you have got any questions, our contact details are up on the screen, and you can send anything across to us or get in contact. But thank you for your time this morning, and I think we'll leave it there. So thanks a lot for attending.